again, the Real Podcast Gal.
Yes.
And like we said earlier, we were going to be jumping around all over the place. And today we crashed the local goat in beautiful downtown New Baltimore. I am Michelle Thayer, and this is
Charity Morris. Our passion is
helping you find your way home. So
why not let love guide you? Today we are here with the amazing Laura Peters of Point Home Lending.
Hello.
Thank you for joining us.
Thank you
today.
for having me.
thank you so much.
As Michelle had mentioned a little bit ago, we've talked a lot about different lender options and all the different programs and home buying myths and tips and all that fun stuff. And we made it a point numerous times to precurse ourselves by saying we are not lenders.
Not our lane.
So, yes, we stay all the way in our lane. And now we can bring you into our lovely lane.
Step out of my lane.
Yeah. Michelle likes to get her toes stepped on every now and
Just
again.
a little wet. Just
Yeah.
a little bit.
A little bit. Let's talk about you a little bit. So you are Laura Peters. How long have you been in mortgages? Why mortgages?
Yes.
What makes you tick?
Yeah, so I've been doing mortgages about 10 years now. I've been in the financial industry though since I was 17 years old. So I've been in credit unions. I've held multiple positions, including, in the accounting, I built a call center and a centralized lending department.
Wow.
So I
So
had
you know your stuff.
I do. I had a friend who asked me to join her mortgage company, and I said, I don't know if I can do that. And she said, I think you can. It's not a far cry from consumer lending. I said, okay, and here we are today. So
That's amazing.
I just enjoy it. I enjoy the education part. I enjoy helping people get into homes and making sure that they understand the process the entire way through.
And that's the biggest thing right there, is having somebody that wants
Knows
their
that, yeah.
clients to actually understand the process and not just sign on the dotted line.
Correct.
And
Exactly.
that's here at the Real. That's what we're trying to make sure people understand, is there are options.
Yes.
Don't just sign on the dotted line. Don't just assume that this person has your best interest at heart. So having
100%.
somebody like you is amazing.
Yeah.
Thank you.
Well, and even to add on to that, like we had said before, interviewing everybody. We always
Yes.
tell people, interview your realtors. You don't just go with the first person. Everything's negotiable. You want to make sure you vibe with them. It's the same thing with a lender. Anyone that
100%.
is involved in
the whole process.
Yeah.
I find it quite interesting, the world that we live in, that somebody will search reviews and Google reviews and Facebook posts and all this stuff to buy an air fryer.
Yeah.
Okay.
Yeah.
They will spend 3 days to figure out what is going to be the best air fryer.
I think I'm one of those people. I'll do all the reviews on everything.
So let's check your.
I know, right? It's like,
history.
You should.
exactly, right? It's like, right. And so, but they don't think the biggest purchase or things like that. They don't think about. They think the brightest lights.
Yeah.
The brightest lights or the biggest bang on Facebook or wherever. That's okay. Well, they must know what they're doing or whatever, and not that they don't know what they're doing, but they don't put the time or the research into it, and probably a lot of it is that they don't know how or where to start.
Yeah.
So referrals is always such a big thing. If you know somebody, so that you can talk to somebody who's had some experience, but that isn't always the case for a lot of people.
Right.
So so interview your lender, your realtors, and find somebody real like Laura.
Somebody that's going to give you the real business and get down to the nitty gritty ones. I've actually worked with you on selling and buying situations.
Mhm.
And she's been so incredibly helpful. My clients still to this very day will come back and just, Laura walked me through every single
That's
process,
amazing.
every step of the way. They felt comfortable. They felt like they learned something. And ultimately that makes it to where they're going to come back to me because they know I'm not going to refer out people that won't take that time with him.
because it's all a trickle. It's all a domino effect. Who you work with matters.
Absolutely.
1-800, give me a loan, ain't it?
No.
No. And it really truly is. You've got to vibe with the person. You have to make sure when you go to a lender, they shouldn't make you feel stupid.
No,
They shouldn't make you feel like you don't understand. They should be helping you and enlightening you and advocating for you and telling you in layman's terms exactly what to expect.
Right.
Because there's nothing more frustrating than sitting at a table and signing something that you have no clue what just happened.
Yeah, and so many people truly do that. I mean,
That's
I've been
literally
at
a client,
closings. I've been at closings then like the closer's like, and so do you want it? And they're like,
No.
yeah.
I just had my client last night. I just had a listing client I signed up. She didn't use me or anybody from our firm before. Not that we're the only good ones, but she said her realtor didn't explain anything. And she got to the closing table. The realtor's in the back talking to her assistant. There's other people chatting with their other people.
just
And
left
she
her-
couldn't even hear the person expressing. So she's like, I just signed on the dotted line wherever it was.
Yeah.
That's just what I
She
did.
could have just sold her kid.
Yeah. And she
Sometimes
would've
we want
been
to.
fine.
I know, right?
I'm not
What do you
saying
mean by that?
No,
Not totally off the table,
Right,
necessarily,
right,
but
Yes, exactly.
yeah, she just didn't understand. So
And that's
having someone
sad,
walk
you know. And the
through.
other thing too, and we have not been able to do a deal together, but I have heard a lot about you. I've been with you in different things, so
Yes.
I understand you do take care of your people. But the biggest thing, and one thing that I have, the vibe I have gotten from you, and this aggravates me so much, is when clients are talking to their lenders and they say, well, I don't want to bother them. Or it seems like they're busy and no,
Yes.
no, that's not how that works. And so being
Right.
approachable, and you're definitely very approachable.
100%.
Yes, exactly.
You know, when you go to find a lender, the biggest thing too is you've got to be comfortable. You've got to be, like you said, be able to call them whenever you need to, because no question is a dumb question.
Right.
Yes.
And you have to,
Said
like,
right on, right?
for me, it's one of those things I will not pull, you know, like when you call a lender, sometimes they're like, fantastic, you want to buy a house. Okay, I'm going to pull your credit. Is that okay? That is one way to handle it. It is not the way I like to handle it. Because if you're pulling credit right off the bat, these people may not be ready. People need to be able to, I love to have a conversation, 15 to 20 minutes at first, just to give them the lowdown, what to expect. You know, what kind of cost is involved, just so we can kind of have that conversation. And it's less intrusive and it's less frightening if you're just having a conversation. Now, during that process, I'm asking them all the questions I need to kind of decide where we need to go.
Right.
But it's just a conversation, and that's so less stressful
Right.
That's
than,
hugely
hey, I just want
important.
to pull your credit.
Exactly.
Yeah.
Exactly. It's like, oh, it just got real.
Yeah.
Yeah.
And
Well, you're establishing a relationship in the way that you're
Mhm.
creating this, in the way that you're starting to communicate with the clients right from the very beginning. You're trying to establish a relationship. You're not just creating a paycheck, and that's
creating a
something else.
file. Yep.
Yeah, that's something else that we've talked about in other podcasts. Is just you have to establish these good relationships that you feel good about, that you feel comfortable about,
Mhm.
because there is a lot of information that they do need to be comfortable sharing with their lender.
100%.
You know, so
And it amazes me what information they'll just give out to anybody. But
yeah, it is.
Yeah,
it is. But that's what makes it so good that you
Mhm.
do have those conversations right at the beginning to say, listen, I just need to get a background of you. Tell me about who you are so that I can help you and guide you exactly the way you need to, because not all processes, not all buyers, not all sellers are going to be the same.
Yep. Yep.
So,
And not everybody's going to mesh, and that's okay.
right,
It is.
absolutely.
That's okay. That's
absolutely.
okay. So let's dive into a little bit of some of the stuff you were just talking about. So when in some of our prior podcasts and things, we were talking about missing tips and miss busted.
Myth busting.
Busted.
Busted some myths.
Right.
Yeah.
And one of the biggest things is, first of all, that I'm going to go back to I want to buy a house, but I don't have 20% down. How am I supposed to save that? I'm renting. There's no way I can come up with 20% down on houses that are like $200,000.
Right.
So I'm going to be renting for the rest of my life.
So you definitely don't need 20% down. It's busted. It does not exist.
Busted again.
So, you know, I think it came from back in the day that if you don't have 20% down, which holds true today,
Mhm.
you will pay private mortgage insurance.
Wait a minute.
Okay. And you pay that until you either reach 80% loan to value, okay, or what they call 20% down.
Okay. I understand.
Okay.
So in that, I think that's where people got that, because it was saving you money
Mm-hmm.
on your mortgage payment per month.
Right.
Right.
Now, I can tell you as a first-time home buyer, if you're going conventionally, you can put down as little as 3%.
Okay.
Really? In
Yeah.
conventional too?
Conventional is as little as 3% for a first-time home buyer. If you've
Okay.
owned a home before, it's as little as 5%.
Okay.
Okay. And you can structure it anywhere in there, 5, 10, 15, 17, you know, whatever you want to do.
Mm-hmm.
That private mortgage insurance also is going to be based on a couple different factors. What you're going to pay is going to be based on how much you're putting down.
Yep.
It's also going to be based on your credit score.
Mm-hmm.
So the better score you have, the less that insurance will be. And every lender is going to have a different rate for mortgage insurance.
Okay.
Right.
So that's another thing that you always want to kind of take a peek at is, you may have a lower interest rate, but your mortgage insurance per month could be $30 to $40 higher. A lot of people
balance that out.
Yeah.
100%. A lot of people get hung up on interest rate.
Mhm.
What you really have to take a look at is your monthly budget.
Yeah.
Interest rate, of course, matters.
Yes.
However, your monthly budget is how you pay your bills every single month. And that's how you want to kind of take a look at things. So there's
That
a lot
kind
of
of
things that
ties
factor
in. Sorry, I didn't mean to interrupt you, but
No,
that
you're
kind of
good.
ties in with what we said. A lot of our lender friends have said: marry the house and date the rate because it is changeable. Can you kind of elaborate on that a little bit more on that statement of
Yeah,
marry the
absolutely.
house, date the rate?
Yeah, absolutely. In this wonderful interest rate that we've been in for the last, 2 years now, interest rates will change. That is a definitive.
Yeah,
It's
absolutely.
it's the way
It's not
it
going to
is.
stay the way it
Yeah.
is always. Yeah.
They have been higher. However, we know they're going to be coming down. Now, when? That's the $1,000,000 question.
I don't believe you.
Right.
However, it's one of those things where if you love the house and you love where you're at, and you can afford the payment on a monthly basis, that interest rate isn't that big of a deal.
Right.
Okay, you can refinance. Typically, we always ask that you wait 6 months for a couple different reasons. Also the appraisal. You have to use that original appraisal till you hit that 6 month point. They base it off of your purchase price.
Right.
Okay.
So you can't get another appraisal until that point is passed. So that's another reason to wait. But you can always refinance.
Right.
So that'll get you the lower interest rate, and that's
And I think that's the big thing is that the big nugget that needs to be pulled out of that whole thing is, like she said, we all live in monthly budgets. We don't
Right.
live in how much is this interest going to be over the term of the loan, and what's not that it's not important, like you said.
Correct.
right.
But let's look at the real life part of it. And this is your mortgage payment. These are your utility bills. This is, home maintenance, things like all part of that budget. So if and a lot of times that private mortgage insurance, it's really not a big chunk on the payment. People make it sound like, oh my God, you have PMI. Oh my Lord, what are you going to do? It's like literally, sometimes $20.
Yes.
Again, up and down with the
depending
Yeah,
on the
depending
person's
on,
credit
but
and all of that.
it's like,
but-
okay, do you want to pay that and have where that home that's in the right place, that's, the right timing, all of that kind of stuff.
And it's all relative. When you take a look at it, think about where we were 2 years ago, and people are like, I'm going to wait for interest rates to drop. They're going to
Yeah.
drop in 6 months.
Yep.
And then look, it's 2 years later. And what's happened in that 2 years? You guys know as real estate agents, the homes have just
Gone up.
Yeah,
to
they
gone
just
up,
keep
yeah.
going. Yeah,
Mhm.
So
absolutely.
that interest rate that you were saving money on, now
Now
The
you're paying
house
more
is
for the
more
house.
anyway.
Yeah, exactly.
Yeah.
So you might have saved a little bit on the interest rate, but now the purchase price has now gone up, $50,000-$60,000, if not more.
Yep.
Yeah.
So I guess we can safely say you verified our little tidbit
Tidbit.
of advice of
Yes.
marry the house, date the rate.
Exactly.
So and that explains that. Thank you for
Yeah.
explaining
Yeah,
that. That'll help our
exactly.
viewers a lot.
Yep.
What's our next
Our
question,
next one. Okay,
Michelle?
so now you're talking the percentages that you could use possibly for conventional. What are some of the other different loan products out there? There's conventional,
Yep.
FHA, VA,
Yep.
rural development type
Yep.
scenario. So just a little brief on how some of those work.
Oh, snap. This is getting interesting.
So, your conventional is typically, that's where you're going to see more of your 3% down. Conventional, usually the higher the credit score, it's more advantageous to go that route.
Okay.
However, as we know, some people need a little assistance.
Yeah.
FHA used to have this horrible stigma, like if you went FHA, you were the worst person in the
Oh,
world.
yeah.
Mm-hmm. I heard that. I wish I didn't hear that, but I just heard that.
You had the worst income and the worst credit,
Mhm.
and it's truly not that way
Right.
anymore. Some people, I just had one the other day, their credit is not bad at all whatsoever. However, when you take a look and you compare what the conventional was versus the FHA, you were talking about almost 1% less. Because
Wow.
in conventional, they were on the lower end of where credit scores should be.
Mm.
FHA, they were considered elite.
Okay.
So you just have to take a look. Each individual borrower is going to be a little bit different based on their scenario. And that's when you get into having a good lender. We were able to put the spreadsheet together and say, here's where your payments are going to be with each program. What program works best for you and your realtor?
That's wonderful
That's
to know that they
wonderful,
have
yeah.
all of those options.
And that stigma, like she was talking about with FHA, that stigma for 0% down on VA loans and rural development, that is, and it drives me crazy on VA loans.
Yeah.
That they think because somebody is coming in with 0 down, that makes them an unqualified or a
Yes.
risk buyer. And it's, I look at people like, you're getting paid at the closing table. It doesn't matter how they're getting their financing.
Yeah.
And
Yeah.
if these people signed on the dotted line to take a bullet for you, they get 0% down that option.
I'd like to take this chance to apologize to absolutely nobody.
If they're able
Absolutely.
to do these things. So, and I know some things have changed within the VA for some of their guidelines with the new NAR settlement and everything, what they can pay for and
Yeah.
things.
And when you get into the nitty gritty, like if you're comparing a conventional to an FHA, some people are strapped. We know what
Yeah.
the economy's been like. We know how much groceries cost. We know
Right.
where we're sitting.
Emotional, damn it.
Conventional, typically they will only allow you to use up to approximately 45% for the debts that you have currently on your credit report and the new house payment.
Okay.
FHA will let you go up to 55%.
Nice.
So there are different perks to each program as to why one might be better for another. Now they all have their differences, they all have their nuances, and that's why you have to get with a qualified mortgage person who can
Yeah.
explain that to you and then help you figure out which one's going to be the best route for you.
Yeah, and it's
Right.
definitely not cookie cutter.
It
And
is
that's
not at
It is
all.
not cookie cutter at
And
all.
the days of, a lot of people will call and they'll be like, what's my interest? I have a 740 credit score. What's my interest rate? It's like,
What? Bro, what are you talking about, man?
That's not how this
That's
works.
not how it works
we
anymore.
used to be able to go, and that's your score. It's not like that
Yeah,
anymore.
exactly.
So it's,
So I went online.
Yes.
Okay, so here you go. I went online and I gave them my name and I told them what I wanted, and it was all wonderful. And they kicked back this letter, and it says that I am pre-qualified for up to $700,000. So now I'm going to go to my realtor and we're going to go look at houses. Okay.
That is 100% my business. Now, where's my money?
I love that for you. Let me know how that works out.
Reality check, please.
Yeah.
I'm not great at the advice. Can I interest you in a sarcastic comment?
Right.
Pre-qualification and pre-approval is one of the things that we are really, really passionate about. And the reason that is because when you come to a lender who's going to give you a pre-approval, they're going to vet everything. We're going to pull your credit.
Yeah.
I'm going to take a look at your income. I'm going to look at your assets. We're going to take a look at everything, and we're also going to run it through what we call automated underwriting. Okay, that's sending it out there. It's going to send it back whether you're going to be approved or whether it's a refer, or what does that look like.
Okay.
When you're doing a pre-qual, they're literally going off of based of what you say.
Yeah, what I call them? Fun coupons. See that? A fun coupon. I'm on the sloop, John B.
And I've heard the story so many times that they've come back and they said, oh, I'm sorry, we didn't see X, Y, or Z. And now your $300,000 pre-approval turned into a $150,000 pre-approval.
Oh my God, what is that? Oh my God, what is that?
Yeah.
And people are crushed. They fell in love with a house. And
That
now
they have no business looking at.
I may be an idiot, but I'm not stupid.
Yeah,
Yeah.
exactly. Exactly.
So it's definitely something, again, you want to talk to people and figure out, another big thing that goes into that when you're looking at a pre-approval is how much are the taxes going to be?
Yeah.
There's so many different things. And the taxes right now are not going to be the taxes in a little while.
100%.
Yes.
Yeah.
And that's one of the things that we see. I had a gentleman I was speaking to, and he was purchasing a home, and it was going for the tax rate at what it was for the person who owned it today.
Yep.
Well, guess what? They were an original owner.
Oh.
So when he figured out what the taxes were potentially going to go to, he no longer wanted to look at that home because it was outside of his budget.
Right.
And that's what we have to remember as true professionals. We have to think about not just right this moment, but what's going to happen to them in 6 months or a year when those taxes come due. Are we now looking at a spot where they need to sell their house?
Right.
I can't do this, Sam.
And that
it's
is happening. It is. And I'm glad that you touched on that because a lot of people do not realize that, and they do not understand that. And there's unfortunately a lot of realtors out there that don't think about that or bring that up to their clients. And there's a lot of
They
lenders
just
that don't either.
know what they don't know still. They haven't gotten the experience to
Right.
get to that level yet.
Come on, get up. Come on. Get up, Bambi. Get up. Try again.
can be devastating to somebody. So being
Yeah.
able to have that professional that looks at all of the P's and Q's for you and brings all, in the end, the decision is theirs as to what they're going to do and what they
100%.
can afford. But
Yeah.
being able to have, okay, here is everything. Here is the big picture. This is what you're looking at now.
I want the truth. You can't handle the truth.
Taxes can potentially go to. This is going to be your monthly payment. This is how much your escrow could possibly be short, and those are all big deals. It's just,
And those are all things that, like you just said, you'll be able to give them all of these different options. This is how, if you go this route, this is all of your fees here. You go that route. But that's why it's so important to, like we had said originally, with pre-qualifications and pre-approvals not being the same, because you got, if you're not giving documents, if you're not giving information to a qualified lender, then you're just not, it's not a pre-approval.
If you didn't have to give somebody proof of everything that you're saying, it's not real.
Got him. Got him.
Right.
And if you think about it one step further, think about it from the seller's perspective. If you're being given one where they know it's already been run through automated underwriting, they've seen all your docs, they've seen all your,
they're going to be more apt to accept your offer because they know it's solid.
Of course I knew. I just had no idea.
And
they can go back in
and
that
then
trail
taking
and see
that a step further on both sides, the sell and the buy side, as realtors, when we're taking people out looking, we're not even going and looking at anything until we know what that actual pre-approval is.
Absolutely.
And we can sit down with you and it's like, okay, I know that you really, you wanted to look in this area and these are the things that you're looking at and you're wanting, but this is the reality of where you're at and what you can afford.
Do you know you have an attitude problem?
Yeah, but it's just a little one.
So now let's take those wants and needs and whittle them down to what are truly needs, what are things that you can live with, what are things you can improve on, and stay within that. So you can, now it's a stepping stone.
Exactly.
And you're going to build equity in that home and be able to hopefully move up to something. And I think having that conversation with people, people look at, especially first time home buyers, they look at, this is where I'm going to be forever. No, it's not.
Yeah, no, your first house is most likely not your last.
Exactly. Exactly. So, and if it is, kudos or sorry, I don't know.
Right. Depends on your perspective.
Right. Exactly. So we'll kind of start wrapping this up a little bit, but what would be your best 30-second advice that you were giving to somebody if they're first time home buyer and they're thinking about it? When should they be thinking about all of these things they need to do?
Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm. Wait. Everybody calm down.
They should be thinking about it right away. Before, if you think, don't look at houses, call your lender. Let them take a look. Maybe you have credit issues. We can work on that. Maybe you have, you don't know what you don't know. You don't know, I have no money.
What?
Well, there's ways. There's gifts. There's ways to pull from your 401k penalty free. There's all these different items and things that you can do. Just having that conversation, it doesn't have to be stressful.
Oh, snap.
There's no ties. You can have the conversation and then wait 6 months. At least you have that knowledge and you have an approximation on what you're thinking.
Yeah.
And they're going to tell you the things not to do. Don't quit your job.
Right.
Don't get a ton of new credit while you're trying to buy a house. The biggest killer is you went out and you bought a new car.
Yep.
Or you went out and got a new credit card because we're at Christmas time. And everybody's got a deal and everybody's got a credit card. And the more debt you obtain and the faster you obtain it can actually lower your credit score.
Yeah.
So you just got to be real careful. So talking to a qualified realtor and a qualified mortgage person,
Right
just
at the very
having
beginning.
those conversations at the beginning and not waiting until you found your dream house.
Oh my God! Wow!
Yeah,
Right.
and I think that's what it really boils down to is
Yeah.
conversations, having real conversations
Right
with
from the
real
beginning.
people, not bots
Yes.
online,
Yeah,
not 1-800
100%.
numbers, but real, because we keep it real here.
All the way
You
real.
need the people who are going to shoot straight.
Exactly.
Yes. Absolutely.
So, all right.
Absolutely.
Well, thank you so very much.
Yes,
It's
thank you,
been
ladies.
wonderful
Thank
having
you.
And
Absolutely.
everybody, please make sure to like and subscribe to our podcast where you find them. You can also email us at therealpodcastgals@gmail.com if you have any questions. We'll be checking in on that often, and hopefully we can get some of your questions answered and maybe build a whole show around it because there's cool stuff here.
Yeah.
Yes, there is.
Just to kind of add that in, I know Michelle mentioned at the beginning, we are at the Local Goat here in New Baltimore. They've been building up a ton of stuff. Behind us, as you can see, this lovely Connect 4 is where we chose to be today. But there's a ton of arcades, fun stuff for kids to do. The whole area has some wonderful stuff.
Downtown New Baltimore, Michigan.
Gotta love it.
New Baltimore, yes. And again, this has been Laura Peters with Points Home Lending. This is her lending situation. This is her. This is her baby.
Her baby.
Mortgage broker.
So
That's
yes,
right.
yes, this is
Yeah,
her thing.
yeah,
So absolutely, make sure you reach out to us for all of your real estate needs. We're real people, keeping it real with you always.
So I am Michelle Thayer, and this is
Charity Morris. Our passion is
helping you find your way home.
So why not let love guide you? Bye, guys.